Construction sites like this, hardly 10 minutes from Nairobi City Centre, have continually shown the good health of Kenya's property markets. Price growth is intense, and the rental figures being charged for some of these properties in the most desirable areas are at par with major cities around the world. What are the factors escalating growth in the sector?
The reason for this is because most of our prices, we believe, have been driven by pure fundamentals, which is supply and demand as opposed to speculation. And we believe that although there's been a drop in economic growth, there hasn't actually been, the construction industry has continued to maintain its very strong growth.
We have a big imbalance between the number of houses that are being produced right now and the demand. If you take the statistics back to the year 2002, we're talking about a need of 150,000 housing units every year. Yet from the market, we're only talking about 30 to 40,000 being produced annually. Now, if you count that deficit over those 7 or 8 years, we're actually saying that we are falling behind every single year. And part of the reason is because of what we would say our economic power as a country.
The winners have been mortgage companies and the banks, charging interest rates of between 10 and 19% for both commercial and residential properties.
The property boom has come about as owing to the fact that with the opening up of the mortgage market, there are more players that have come in terms of banks, and that has increased competition within that sector, and having increased competition that has resulted in a shift in the interest rates, and effectively making the cost of borrowing a little bit lower in terms of interest rates, which has attracted a bigger segment of the people who initially were locked out because of high interest rates.
Despite the tremendous growth of real estate in Kenya, the sector still lacks an official property index to show the direction of the market. The players such as Has Consult have gone ahead and developed one.
The House Property Index is based on actual sold data of properties that has happened in the real estate market in Kenya since 2005. This has been based on our own data as a company for transactions that have actually been concluded. What happened is, in an effort to expound the index a little bit, we created the composite index, which basically takes market price data from across the board. So this takes all estate agents in Nairobi and properties in every market segment that have been considered. However, the focus of that has been the middle and the upper segment of the market. What this has done is basically to show the market price trends of properties from sort of the years 2005 up to 2009.
According to Composite Index and Has Property Index, data shows a steady increase in house prices from mid-2006 to 2008 and started leveling off heading towards 2009.
Largely, the global financial situation caused, of course, for one, international investment to reduce, diaspora funds to reduce. But of course that has a rollover and a kind of a snowball effect on our local industries. So spending power was much lower in Kenya. But I think more than anything, I would say the dip came from caution. It was sort of a wait and see attitude from investors. Some believe the markets would just somehow crash, which, as you know, they haven't. But I think it was just to adopt an attitude of being a little bit careful before making any investments. So you find people were holding on to funds and not putting them in real estate.
However, there are concerns that the high property prices will continue rising beyond the reach of ordinary Kenyans.
It's true that there's a lot of demand. We've seen this, as I said, in the cement consumption and other things. We're demanding a lot of homes, and this is a trend that we're seeing throughout East Africa. But the market is not able to deliver homes at the pace and at the price that people want. So there is a big shortage in housing, and professionals and the building industry are still not able to deliver. The supply chain of building has a lot of bottlenecks that make it difficult to deliver houses cheaply. So we're looking at a lot of policy interventions that can help create incentives so that the industry is able to develop. But we're also looking at enhancing the skills and exposure of people in the industry.
The truth be told, again, you must pay for sand, you must pay for cement, you must pay for stones. So without the government coming up with a program of subsidy that would encourage those who are not able to get financing, loans and mortgages. Without that, I think for a long time we will be still looking at housing for most of us as a pipe dream.
And while there has been speculation in certain quarters of a correction in the real estate and property markets, experts expect the upward trend to continue.
I believe things will still keep on an upward trend, but as more players come into the mortgage market and the rates become more competitive, then you're bound to find there will still be some scope for growth and rise in property prices, but it's slowing down.
I think property is still remaining one of the best investments in this part of the world. If you look at the kind of capital holding it has as an investment, if you look at the trends in Kenya, you don't see very significant rises and falls in the property market. There's been a very constant growth rate. There have been dips, but they're not what people would call crashes. So I think as an investment, it still remains one of the best in this part.
Judging from the past year's trends, it is expected that the real estate sector in Kenya will keep attracting more investments and will be a keenly watched one by investors.